Happy Thursday. We got some good stuff. I'm not going to say it's our greatest ever because it's a little heavy on stuff that's just informational, but it's good stuff. Predictions on interest rates and where they're going. I think that's the hook, right? That's what's going to get you watching. So let's go through this. I'm going to share the screen as we always do, right? And let's look at what we got. So rates, man, call it flat. The reality is, I think unfortunately we may be seeing a movement where flat is going to become higher rates. So if you look at those last 4 days, 5 days, kind of just been going sideways, but you see that little squiggly line that we're now hanging on. I have a feeling we might break below that. And if we do, rates go higher again. Because remember, guys, down in this instance is bad. It means lower. This is a mortgage-backed security chart. So you can see how the job reports was super bad about a week and a half ago. And then all of a sudden, 4 days later, you had this big comeback because inflation reports and everything looked really rosy and good. And then just kind of moving sideways. So I think, unfortunately, Mark's prediction, I don't see higher rates in the week ahead. But here's where rates are predicted to be at the end of this year. The average supposedly 6.33. You can pick your favorite one that you want to trust and believe. Certainly love that National Association of Realtors there. Believe in rates in the sixes. Them and TD Bank believe under six. Everybody else is saying low to mid. My personal prediction, I think if we get to 6.5, I'll be happy. I was more right than all these people were last year with 2024. So we'll see if I'm right this year. But ultimately, low sixes is where the economists of these places are predicting rates to be. I would like to think that that's true. I just see an opportunity where rates could go up in the near future and then come back down and maybe end up at 6.5. That's my bold prediction. I'm making it. A couple of things that came out. So the Congressional Budget Office came out and basically said, like, get this, our budget is going to go up 79% over the next 10 years. And our budget is already massive as a country. So much so that right now our debt, it's about the size of our GDP. And so they think in 10 years, we will exceed our debt by 118%. So to put that in terms, if you have to pay your bills as a human, as a person living, and your bills are 118% of your actual income that comes in the door, that's a problem. And that's where we're going to be. So time will tell. The other part on the bottom, they do the CBO, they predict unemployment is going to stay around 4.3 this year, kind of just flat. I think I agree with that. We'll see if that holds true. And they think the Fed's only going to cut rates one time this year. So time will tell. But on that employment piece, if that happens and stays, terrific. If it gets worse, that's actually good for our rates. So speaking of rates and all that stuff, check this out. The far left, look at the graph. The mortgage applications so far in 2025. This is the purchase application index, meaning refinances. Refinances actually have gone up. The applications for refis have gone up. Purchases gone down. Look at that. You see the light pink is 2023. A little more red is last year, 2024. And the really dark one that shows just a very low number compared to the previous years. Not ideal. It is what it is. There's a lot of reasons. I think weather and just, kind of catastrophes that have been happening here, that could be one part. I think the other part is just where rates are compared to where they were getting better in those previous 2 years around the holiday period. So time will tell. We'll see if this predicts the future or not for what we're in store for. Headlines, they're baloney, right? Stale listings rise. Look at this, guys. This is the median days on the market for homes that are being sold. And after plunging during the post-pandemic craze, right? We knew that COVID was nuts. But check it out. The median days that are, quote, stale, we're still well below where we were in terms of houses getting sold quickly before the pandemic. So check out the peaks of where we were in 2017, 18, 19, 20 for the number of days, over 80 days on the market. Yes, we're at 70, but that's still not where we were. So meaning it's a, quote, normal market. Nobody thought it was a terrible market in 2019. So it's one of those things that, again, stale, we're getting back to somewhat of some normalcy, which is really good. Turns out the fastest increase, Nashville, Orlando, Rochester, New York, just throwing that out there. The housing starts, and this is why I'm not real worried about a bubble or anything like that nature. The starts are averaging about 1.5 million. There's a lot of numbers and graphs. I wouldn't, have to look at it outside of just if you want to push pause. But the reality is construction, the builders I know, man, they push pause really quick when they don't feel like they're going to sell something. There are some inventory they are sitting on now. So that could help prices. Maybe they give a little better deals to get people in the door to get that inventory down. But the new starts, they're not happening. And you can see that through the permits over there in that little graph on the blue. Like they're not coming in fast and furious. And so that's the part where I would just say I don't think we're building houses fast enough to keep up with demand. And time will tell, but I just don't think we're going to have this balloon of inventory. So mortgage payments, just FYI, as I just mentioned in the previous thing about disasters and things like that, for those in California and even those hit by the hurricane in Florida and everywhere else, call your mortgage servicer. You can do forbearance. That word's coming up. A buddy and I couldn't think of the word forbearance the other day, so that's part of the reason why I threw this in here for an homage to him. The executive orders, supposedly, there weren't any real details, but an executive order that Mr. President Trump signed was to help lower costs by removing some regulations and some compliance. I've said before, 25% of a home's cost. So here it's 23.8. 25% of the home's cost, which is about 100 grand, goes towards all this stuff. I've asked around for builders. They don't feel like a lot of that's going to be something you can remove. You can't just snap your fingers and $93,000 just disappear. There are some. I just don't know how much this is going to help. And there weren't any real specifics on it either. This is interesting. So we've all said it takes time, but look at that chart in the middle. See the rates that are below 4%, 3%, and 6%. You can see the verbiage over there on the left. But basically, the number of people with 4% or below interest rate has dropped to 55%. I think it was like 62. I don't see that in here right now, but it used to be 62%. The below 3% went down from 24% to 21%, meaning people are getting rid of their 3% mortgages. Whether they're refinancing or moving, they're going away. The number of people with a 6% plus, over 6%, has doubled. So what this is telling you is that this is going to work itself out. People die, get divorced, get married, have babies, they sell, they refinance, they get in credit card debt, they need to buy a new, they put in a pool. There's a whole bunch of reasons why people could or would refinance or sell a home. And as that works through the market, things become more normal. It's still going to take a while. I think another 3 to 5 years before we see this lock-in effect really go away. But over time, even if you got a 3% rate, if your job moves you to a new state, you're going to go, right? And so a lot of folks, they're working through those mortgages. That's a good thing. You think, boo-hoo, I'm sorry somebody lost 3%. That does stink. But at the end of the day, it's good for us as an industry. All right, so normally I wouldn't put the job reports underneath the let's have some fun section, but it transitions. And side note, healthcare and government, those two things, that's not an economy growing. Those are things that always have to happen, right? The government and healthcare. So most of the job growth is going to be in those two sectors. Everybody else is just blah, right? So that's the part that I just want to bring up from a job report. But here's the reality. AI. I've been nerding out to AI. I try to spend a little time every week, about an hour or two, to at least see what's new and play with some toys. But Mark Benioff of Salesforce basically is trying to have AI play a huge part of that. I use Salesforce, so I'm glad for that. Goldman Sachs, they're launching AI assistants for their employees. They basically think that it can act like another employee, and they're going to try to roll it out to 10,000 employees. So what's interesting is these employees are going to train these AI bots to basically try to replace them. So that's interesting. Google this. Apparently, $285 million could break a U.S. sales record for a home. I had no idea. I didn't know what it was if you'd asked me. But if you want to Google it, $285 million Florida mansion, 50,000 square feet, car museum, boathouse, bowling alley, everything you'd hope for, right? Shooting range, golf simulator, private tunnel. I don't know where the tunnel goes, but private tunnel? How cool is that? And then lastly, just because it's, something that marketing people wanted me to include, the first lady, you see, first lady, Ivanka Trump, right, goes in, not first lady. Anyway, also saying, wearing $1 million diamonds on the inauguration piece. So looks very nice, very pretty. They just want me to include it. It's not my thing. Good for them. Mortgage Mark meme of the week. I do love this. How old are you? I'm 11. Well, I was your age when I had 11 income properties. I don't know why. That tickles me. As always, you know what to do. Share, subscribe, forward. Love your comments, positive or negative. Let's call it constructive. Constructive or positive. We accept them all. Appreciate you, as always, watching. Hope you have a great and wonderful rest of your week. And the weather's warming up where we are. So thaw out.